We also have a look at hog markets this week with University of Missouri Extension ag economist Scott Brown. After the United States set a monthly record for pork exports in November, we knew 2017 was on pace to be a strong year. December's export total, released this week, was more than enough to push the U.S. to a new yearly record. 2017's total was nearly 5% above the previous high set in 2012. That demand has continued to help the market. Prices for the February 2018 lean hogs futures contract held above $70 a hundredweight through all of January and peaked close to $76 earlier this week. We talked with Scott Wednesday afternoon and began by asking him to recap price movements so far this year.
Well, Jeff, we've started 2018 with prices that are very near where we were a year ago when we started the year, so it's been a good start to 2018 despite what's been some increased supply of pork to the marketplace.
What does the profit outlook look like for 2018?
You know, right now I would say that we may still see 2018 as another profitable year for the pork industry, and you know, I go two things at play here. Number one, market prices for pork that have stayed higher than maybe we would have thought for 2017 and 2018. But in addition, I think when we look at the cost side of the equation, I see nothing that's going to move corn prices higher as we go through 2018, barring a short weather crop here in the U.S. So cheap feed and reasonable hog prices, we might mark another year with some modest black ink when it's all said and done.
How strong is the market for feeder pigs?
So it's been a phenomenal market, especially as we ended 2017 and entered into 2018. I think you sure can see that there's demand for feeder pigs out there in many parts of the U.S. Again, I'd say part of that has to be associated with what's been $3 corn for much of the I-states that might be interested in feeding some hogs. But when you talk about feeder pig prices that are pushing $90, I don't think many of us would have probably seen that coming. Perhaps that's just a good indication of there's a lot of capacity to feed hogs available to us today, and those feeder pig prices reflect that strength.
The Americans set a pork export record for the country this year, or in 2017 I should say. Why has the U.S. been able to be so competitive?
Well, I think when you look back at 2017, it's important to remind ourselves that probably the first half of 2017 was a strong half as a result of what was going on with Mexico. We hope that continues, and being a close neighbor for us, I think that's been helpful to our record. But at the same time, you know, we did see the dollar weaken relative to some currencies around the globe that I think was helpful to trade in pork products. And I'd be remiss not to remind us that global economy continues to grow and get better as we went through 2017, and I think that put more money in the pockets of many consumers around the world, and part of that demand ended up giving us some additional U.S. pork exports.
Where would the majority of competition come from, the EU?
Well, I think when you look ahead in 2018, I do worry about what happens with the EU, and here's where we can talk about Japan for just a second. With the recent EU-Japanese agreement, I worry about whether or not we can stay competitive without our own new bilateral agreement. I think many of us were looking forward to the opportunity to export more U.S. pork to Japan with the changes in the gate price mechanism that we would have seen from a successful Trans-Pacific Partnership Agreement. But now that that's gone and we've seen the EU enter a new agreement with Japan, I worry about how level that playing field is, and as we look ahead, whether the EU gains a lot more of that market than we can. And it's important, although we set a record in 2017, when you think about just the sheer amount of pork that we're going to be producing the next couple of years, we need records in 2018 and 2019 as well.
What is your price forecast?
So that's a tough question to answer right now. I guess as I look ahead in 2018, I see very much a repeat of where we were in 2017, with maybe $3 a weakness as we go through the year relative to where we were in 2017. You know, I like to remind us when we got some pretty high hog prices in the mid part of 2017, that was about the time we saw pork belly prices that got near $2.20 a pound. I'm not certain we get that strong on pork belly prices as we go in 2018, so I think that moderates where we end up in terms of hog prices. Now, the flip side of that is we know we have more capacity coming on in 2018, and we're going to chase hogs a little harder from a processing standpoint. I think that can be supportive to hog prices, but at the same time, I think this ultimately hinges on what we can sell pork out the back end of those plants at, and I think when we see pork belly prices not quite as strong this year, we'll see barrel and gilt prices slip again $3 to $4.